Hello and welcome to Commodity Culture. My name is Jesse Day, and this episode is brought to you by MoneyMetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JesseDay to get a $10 discount on your first purchase. We are continuing with our 2023 Sunset series where we look back on 2023 with experts in the commodities space, find out what surprised them, what went according to plan, and what they anticipate looking ahead to 2024. And today, my guest is the author of the Silver Manifesto, the founder of the Morgan Report, and an expert in the precious metal space. Somebody I always love talking to. It's David Morgan. Welcome back to the show.
Well, Jesse, thanks for having me back.
Great to have you back. And I want to take a look at 2023 first, just kind of in a broad question. When it comes to silver specifically, when it comes to the precious metals, or even to the broad economy and markets, what went the way you thought it would? What surprised you?
Well, what went the way I thought it would was the trade I've had on for months, and that was that platinum would outperform palladium. And also, I thought that the other white meat, platinum would outperform silver, and it has. So that went the way I expected. Uh, Silver did not do as I expected. I think if you go back and look at my premium service, my paid service, I said once, twice, or thrice that I thought silver would make it above 30 this year, not necessarily make it to 30 and hold it, but at least trade above 30. And that hasn't happened. That's something disappointing. Gold, I think I was pretty close to what I expected. I thought it would go through and pierce through a new high. And it's been close, and the year's not over. There's a possibility it could do it in the last month. Uh, but perhaps not. I mean, the seasonality for gold used to be December was a very powerful month for gold, and that went away, I'll say a decade ago. In fact, for 4 or 5 years, the last day trading was the worst price for gold that entire year, and that happened several years. But anyway, uh, that's how I see it. So I'd say I was 2/3 correct, 1/3 wrong. The silver was disappointing, I think, for all of us, based on how much offtake there was, how much the COMEX was drained, how much came off of the SLV. I mean, all this physical metal moved, and then India buying so much silver here, announcing what they bought here a week or two ago, maybe three, whatever it's been. And all those factors adding up, and you just say, how the heck could silver be stuck under $25 US? But it is.
Yeah, I'd like to pull on that thread regarding platinum and palladium because these are metals that are rarely discussed or paid attention to by the precious metals community at large. It's always usually silver or gold. So, what were the signs and the data points you saw that led you to believe that platinum would outperform, and in regards to palladium's performance as well? And how do you see both metals performing as we head into 2024?
Well, that's a great question. So, not to obfuscate the question at all, I'll answer it. But we did pretty involved studies. I mean, our reports are pretty powerful, and do we get it right all the time? No. So we did a few dissertations on platinum. And the reason I chose the spread of platinum long and palladium short was that there's a bit of a misnomer out there, even to the metals heads, that platinum can only be used in diesels and palladium has to be used in gas cars, and that's totally wrong. You can use the platinum group metals in either catalytic converter. So knowing that platinum costs less than palladium at the time I made the trade, and of course, palladium is slightly above platinum's price now, but they're almost at par. It was easy based on what I read, what I studied, looking ahead, what the Platinum Guild had said, and that the auto industry is going to use more platinum. And the other fact is that 70% of the platinum comes from South Africa, and they're having very big problems in many areas, politically and economically from an energy standpoint, because they're not getting as much electricity as they need all the time. And most people are not very studied in it, don't care to, and that's fine. But if I'm going to recommend something, I'm going to get all the data I possibly can to make a decision. And then, of course, platinum is mined at extremely high temperatures, extremely deep in the earth. And they've had some issues with the miners not getting paid what they want. So all these factors, and some of them have come to the fore and some haven't yet. So that's why I put on a spread trade. And then looking at the top 10 producers, excuse me, the top 10 costs, all in sustaining costs for platinum is like 1,300 an ounce. And we're sitting there at 850, which is when I got in. And I thought, well, that's a safer move. And I'm in a big position, by the way. I mean, not like, Warren Buffett big, but for me big. And I put a pretty big bet on platinum. And of course, I told our paid people that I was. Not too many people follow me into it. I mean, the other metals, they're hard to get in and out of, really. I mean, you got to pay a pretty high premium on the way in, and you got to take a pretty big discount on the way out. But if platinum is going to do whatever it's done this year, 40%, it's outperformed everybody, then why not? You know? So I think I answered the question. We did a big study. We used the Platinum Guild. I was actually at the Four Seasons, one of the most prestigious hotels in Hong Kong, and spoke as a keynote. And I spoke on silver, but they also put me on a couple of panels with the Platinum Group Metal guys. And I felt a little bit intimidated, not a lot, Jesse. I mean, I know my stuff, but I'm not nearly as versed on the Platinum Group Metals as I am the others. But I study it more than most in my area. And I was on the panel, and I held my own. And then it got to, what stocks do you want? And of course, that's my sweet spot. So none of the other guys had an answer, but I did. So that made me feel kind of.
Nice. Yeah. Definitely some metals to keep an eye on moving into the new year. Again, I think they're not paid attention to enough. So I'm wondering if over the course of 2023, through the events that transpired in markets and with the metals, are there any takeaways that you've learned from that you can apply to the investment decisions you're going to make as we move into the new year?
Well, at the risk of sounding trite, patience. I mean, we've all been patient, and it's not been my best year as far as you know, getting more subscribers or whatever. And I've talked to others in the industry, my industry, and they're in the same situation. And I get it. There's two things that come to mind. One is people just burn out. David, I believe you. I trust you. I know you're shooting straight and, from the head and the heart. But you know what? I've held silver for 10 years and it hasn't done anything. And that's valid. Or it's done very little. Depends on how you get in. And then gold guys are happier because, the all-time high was in 2011 and it was around 2000 and now it's around 2000. But that's a round trip. And I point out that if you bought my favorite gold oil stock at the time that gold peaked at 2011, you're up 300%. So that proves that if you can pick stocks, you can do better than the metal. I would say it's a fallacy. On balance, if you do the averages, sometimes owning bullion is just as safe or better than owning the stock. So why take the added risk? But there are other times, if you can pick stocks, you can do a lot better. And we have one in the silver arena that is better than silver as well. It's doubled when silver's at 50. So the stock is doubled. That'd be like silver going to 100, but silver's cut in half. So again, you pick the right stocks, you can do better than the metal, but you have to know what you're doing. And obviously, we're pretty good at the top tier. I mean, when you get in the speculative space, Jesse, it's such a tough game. And we've done pretty good there too. Actually, I just did a video with Warwick Smith, and he reviewed four of the picks we've done in the speculative arena, and all four of them, I think, at least tripled. It's got to be nimble, and that's what I teach. When these stocks double, I say sell half and ride the rest for free because these stocks really move up and down.
Well, I've got to get your forecast for silver as we move into 2024. Obviously, that's what we generally discuss the most when we speak. You are the author of the Silver Manifesto. I think that's the metal you're most associated with. So I'm wondering how you see things unfolding for the silver market next year.
Well, you can't live in a vacuum forever. And I think there will be a nice move. I'm pretty certain we'll see above 30. And once we get to 30, 33, there's not a lot of upside resistance. So if we traded in a 33 range for, I don't know, I don't know. I mean, I know markets, but no one's got a perfect crystal ball. I say we trade there 3 weeks a month. We're going to be looking at 40, 50 next year. And I'm not going to say that. I think we're going to get above 30, and I'm going to watch it and give a more accurate analysis. But they can't keep taking physical off the market, have all the solar that's coming. The EV market falls into it as well. And there's other arenas that, use a lot of silver. And there's someone out there in the silver space, and he's a bit of a character, and he just jokes about wood preservative. What he doesn't know that I do is that silver was actually it's really good for a wood preservative in a marine environment. So that's if you're making docks and stuff. Also for playgrounds because it's not toxic. So when you have these jungle gyms for the kids made out of wood, if you preserve them with silver, they're healthy. But if you use copper, it's not healthy. And if you did that for all the playgrounds and all the marinas in the world, you'd run out of silver. So it's not going to happen. There's been a few things like that silver has a good application commercially, but it'll never be used because there's basically not enough silver. So he jokes about it like it would be a minuscule amount, but actually, in reality, if it were to occur, and it won't, but if it were, in theory, you'd eat up a ton of silver. It'd be more than solar panels.
So, do you think the demand drivers for silver next year are going to be more tied to the industrial side? Do you think we could see further cracks in the financial system, such as the bank failures we saw earlier this year? Could more of that happen, and maybe we see silver return more to, it is a monetary metal, but as a flight to safety sort of asset, as people realize that the global financial system is in a precarious position.
I do see it both. I think, because it is both money and an essential industrial metal. If you look at what the solar projections are, that's going to take a big whack. And then you see what we already know about the financial system and how fragile it is. I mean, the main thing that kept silver down is that still so much paper out there that covers the the people that want to play the market versus the physical market that really should drive the price, which really doesn't because the paper cover ratio is enough. But there is a point of no return when the physical market takes over. And we've seen that happen a couple of times, but it hasn't lasted long enough to really, punch out the silver price. I think that could happen next year because if the institutions come back, that will drive the market. Really, I mean, this sounds conspiratorial, and I don't want it to. But the fact is, you haven't seen any institutional participation this year in silver, meaning 2023. And so then I have to ask the question: well, was someone given the word, like don't buy it? Because you go back to 2020, and the institutional investment in silver was like 320 million ounces. We got a pretty good lift in the silver price. So what's different between 2020 and 2023? Well, I'll tell you. What's different is the economy is horrible, and there's more need to be in a safe haven than there's ever been. And yet here's 2020 where you had 300 million ounces bought by institutions, 320 million. And this year, I don't know what it is, probably zero. I mean, I'm being a bit facetious here, but it's not been a high demand. But that doesn't mean that somebody somewhere on the institutional side doesn't say, you know what, I don't give a darn what my instructions are. I run a family office. I run a sovereign wealth fund. I listen to Morgan Report. The hell with it. I'm buying silver, and I'm buying a lot of it because Elon Musk just announced he's buying 2 silver mines this year or whatever happened. So I'm still bullish. I know I sound like a broken record, but I have called tops and I have told people to take profits, and I have that record. Three times I've said take profits, and those three times are really advantageous to taking profits. So I'm not a one-way Charlie that it goes up always. It goes up and down, and I know that.
There's some very interesting data points there. I'm wondering if we step outside the precious metal space, are there any other commodities on your radar at the moment? I don't know if you look into the uranium space, energy. We obviously already covered platinum and palladium, base metals such as copper. Are there any other commodities that you think could be outperformers in 2024?
Copper is a possibility. I'm not as bullish as some of my contemporaries, but it's fairly tight supply. But it depends again on the demand equation. I still have the overall big picture look that we're contracting in the global economy, not expanding. I mean, I drive around and, I'm pretty observant. I'm world traveled. I haven't traveled much in the last, 8 months or so, but there's a lot of channel stuffing. There's a lot of new cars that are just sitting there collecting dust. In my area, which is not a very rich area, but it's not poor, you don't see many new trucks or cars out there, but you see a lot of them on the display cases, on the dealers' lots. So the other commodities I'm bullish on are the ags, the foodstuffs. I'm bullish on that. I'm also bullish on energy. I think oil is going to do well. And I do like uranium. We have two uranium picks. They're both doing pretty well. And there's a third one I may be looking at pretty closely here. It's not my favorite, um, but I like the SMRs, the modular reactors. I like that idea a lot. I really don't like the big reactors that cost billions and take 3 years longer to make than they're forecast to and all that. I really think these small modular reactors are the way to go, and I just don't know why we don't do it. But that's another story.
Very interesting. I wanted to ask a broad market question here, and that is 2024 the year we're finally going to see a big correction in the broad market and a recession? Obviously, those things aren't mutually exclusive. One could happen first or second, or that one could happen and not the other. But we've been seeing the Magnificent Seven, these overvalued by many people's estimate tech stocks holding up the indexes, and people are starting to point to the fact that it's just starting to get ridiculous in terms of the valuations. um, will we finally see a crash? Will we finally see a recession in 2024? A lot of people were expecting something dramatic in 2023, and it seems like the market can remain irrational longer than you can remain solvent, sort of situation. So do you see those events playing out next year?
I do. First of all, on the stock market side, I could see a crash if the Fed continues to maintain a strong posture with interest rates. So, in other words, they continue to ratchet up and or at least maintain where they are now, which I think is more likely than most. Then you could see a pretty good crash in the equity market, which, by the way, if you take the Magnificent Seven out of it, the stock market is not doing that well. But these powers that be, they know how to play the market, psychologically make everybody feel good by manipulating enough of the top tier stocks to make the averages look good, when in reality, if you look at the broad market, it's not that strong. The other thing is they start lowering interest rates and go into this basic free money policy again. We could have a stock market that just takes off. But in a high inflationary environment, if you look at all of them in past or recent times, I mean, you look at like Venezuela or Zimbabwe, or you'll see these magnificent runs up in the stock market. Zimbabwe is an example. And yet, what that's doing is it's trying to maintain purchasing power, but it really doesn't. In other words, you get a huge lift in the indexes or in stocks in general, and they do go up in price, but they do not, again, maintain purchasing power. Gold and silver do. You saw that in the Weimar Republic. You got this. So it's possible that if we start with the Federal Reserve of the United States starts lowering interest rates or lowers them quickly or whatever, then you might see this big lift in the stock market. And yet, if you really look at the real true inflation rate, that the market going up 10%, is not commensurate with the true inflation rate of, say, 20%. I don't want to see that. That's indicating more of an indication that we're in a currency destruction, a currency crisis where the value of the paper money deteriorates so fast that people would rather buy anything like stocks or peanut butter if you're not in the stock market than hold the currency. And that's a possibility. So either way, I think I'd be right. On the recession side, yeah, you can have an inflationary depression or a deflationary depression, but you have a depression. I use depression just for effect because I do think the recession is going to be deeper and more harsh than what we're told by the main pundits. I don't want to be a gloom and doomer, but I'm a realist. But you're starting to see it already, where there's certain food items that you can't get anymore, or they're priced so high you can't afford to buy them. And I think you're going to see more of that trend. Doesn't mean the end of the world. Doesn't mean it's really really bad, but it doesn't mean happy times are here again either. So I'm looking for that trend, Jesse. Yes, stock market. Hopefully, we get a downturn, which means that the currency is still holding value and things are repriced because we've overextended ourselves. We need to ring it back in, and you can do that, especially if the bond market cooperates, which it has, because the prices of the 20 and 30-year old are pretty much hit hard because we've had to raise interest rates to maintain people's faith in the dollar. It's a confidence game, and to keep them confident that the dollar's worth something, you got to pay an interest rate that's worthy of holding dollars or saving dollars. And so we're in a mess. Can we get out of it from here? I doubt it. Well, we can't get out, in my opinion, gracefully. But the market could correct all by itself, with even the bankers being kind of astounded at what's taking place, and they can't control it. Could get out of their control. And if that were to take place, the market itself would reprice everything: stocks, houses, commodities, oil, you name it. And that would be very harsh and very hard to take. But the powers that be are so used to manipulating markets and keeping things status quo that they could control it and that no one gets hurt that bad. And, the Fed put's going to make sure that the stock market doesn't come down too far, too fast, and all these things that are in place. But there's the mother nature of financial markets, and we haven't witnessed it yet. We may in 2020.
Let's touch on gold and silver mining stocks here. A lot of people pointing to the fact that they're, especially when it comes to gold, quite undervalued compared to the metal itself, particularly in the junior mining space, which can be extraordinarily unforgiving and brutal. A lot of people throwing in the towel. Sentiment seems quite low. I'm wondering if you currently see opportunity in the gold and silver mining sector. If so, is it the juniors you're looking at, explorers, the bigger producers, the royalty and streaming companies, or is this a time where you're sitting on the sidelines and maybe waiting for a larger broad market correction, which could bring the mining stocks down along with it?
Yeah, it's a tough one. I kind of see it both ways. I mean, first of all, it's a good time relative to the equity to metals price differential. It's never been this wide. So you're pretty safe buying the equities. I would start with the top tier. So I'd be into the royalty companies pretty much. Some of them maybe the top tier names. I've got a junior speculative list. Our junior producers are down. Most of them, I think one is up, but they're okay to buy at this time because they are producing. So when gold and silver go up, then these stocks will go up because the bottom line, they're making money. Uh, I would wait on the speculative side, but I think it's good to have cash. I'm holding about 30% cash. I probably have a bigger cash position I've had in a long time. And I'm waiting for that market crash that I indicated could happen, and the gold stocks will get hit, but it may be just a few days. It could be very similar, in my opinion, like 2008, where the whole market goes down. Gold went down like 30%, but 30% was the least down of everything else. And that's what I kind of expect. So you have to be ready. You'd have to pull the trigger pretty quick, in my opinion, to get that mispricing, because you might only have a few days or a week. I don't think you're going to have 3 months. And of course, we've been, as I said, what do you do this year? And it's like, be patient because it's grinded lower. It's like watching paint dry. It's been miserable. It's been hard. It's been harsh. Yeah, markets can have different personalities. It can be that watching paint dry, and I coined the phrase "silver will scare you out or wear you out." You have these huge moves up and down, these spikes, or it can also just drone on and not have much do anything other than a trading range. So
Yeah. So you touched earlier on institutional investment in precious metals. Obviously, 2022 and 2023 were record years for central bank gold buying. Um, I'm wondering if you see that trend continuing in 2024, and if you think we might start to see more allocation from institutional investors into gold and perhaps the silver space as well. We've seen the treasury market take a beating that was supposed to be the safe haven asset. Do you think things could shift and some of the big money, the sophisticated money, might start looking at gold and silver more carefully?
absolutely, I see that the institutions will come back in the market, and that's what's really going to set it off. I mean, if we had a year in 2024 like we had in 2020, where you had over 300 million ounces of silver bought through the ETFs, that would definitely be competing with, again, the industrial demand that doesn't go away. I think the deficit by the Silver Institute's forecast like 238 million ounces or something like that. And there will be a run to gold. And I've already explained this, but I want to do it again. So the run to gold means that, the smartest money buys gold, and then sophisticated money buys gold, and then, institutional money buys gold, and then the last to buy gold is the public. The public is at the top of the parabolic move. And so we've already seen the move by the smartest money, and that's the central banks. They've been buying gold at a rate that's unprecedented for the last 50 years or so. Continued that happened in 2023, so that's a fact. Excuse me, that happened in 2022. So that's a fact in the record book, and it continues this year. So the run to gold, I've used this analogy before, but I again think it should be heard. It starts like a crawl almost, and then it goes to a slow walk, and then it goes to a full walk, and then it goes to a slow jog, and then it goes to a full jog, then it goes to a run, and finally it goes to a sprint. That's how the run to gold begins. So we're in the crawl walk phase right now, where no one's paying a lot of attention to it. Certainly not the public. No, I'm not talking about the few of us that are metals heads. I'm talking about the general public. And then you'll start seeing, some institutions, and then some pension funds, and then family offices, sovereign wealth funds, that kind of thing. And you'll see more and more, you know, participation in the gold market across the board. And then, at some point, gold's at, 2,500, 3,000, whenever it is. And the public says, oh my goodness, I thought gold was at 2,000. What happened? And it turns out, wow, I better buy gold. Yeah, the economy's doing this. Wheat prices doubled the last 6 months. Oil prices over $100 a gallon. I can't sell my house because interest rates are too. I mean, all this stuff could come together in a matter of months, and people have a whole different outlook than they have right now, and start making different decisions. And that's to my thinking and my study. I mean, I've looked at these markets for so long, and not that I can't learn more. I always try to learn more. But the general scenario is what I just outlined, Jesse. All those things start to happen is all of a sudden John Q. Public and Jane Q. Public wake up and say, we got to buy gold. We got to buy silver. We got to get out of the stock market. Or we better sell our house at a discount and get to something we can afford. Or, all these things. And it's not normal market activities. It's just normal markets, but we haven't had normal markets. If we had normal markets, the market would have said, hey, we printed up too much money, we got to make a correction, and things would be a lot better than they are right now. Because when this thing starts to unravel, it's going to be interesting.
So, switching from the institutional side to the retail side, you mentioned that the retail investor is generally the last to the party. Do you see a world up ahead when it comes to the markets where there's a rotation out of overvalued tech and into commodities, obviously precious metals included? There's people who have theories about this, that we're going to start to see commodities become the new tech stock, so to speak, at some point in the future. So will there come a day where Jim Cramer is talking about Newmont and different gold and silver stocks? Is that a possibility? Obviously, this could be a long way off. But do you see a commodities super cycle or huge bull market up ahead over the course of the next few years, maybe the next decade? And do you think commodities and precious metals will come more into the mainstream consciousness?
I do. I don't see a commodity super cycle like some of my peers, but I definitely see some of the commodities that we talked about earlier, the ags and the precious metals, maybe some of the base metals. But it's going to shift from, the paper side of the equation into the commodity side. I mean, commodities are needed. You can get by with that. If you don't own Tesla stock your whole life, it's not going to affect you that much. If you owned it and bought it directly and made a small fortune, then good for you. But commodities, if you don't have cotton, if you don't have lumber, if you don't have, you know, copper, I mean, any of these things in the commodity sector are things that are absolutely needed. And because of that fact and the equity, so it's a cycle that goes back and forth. In fact, I lived through that early on, and it was like get out of equity. We had, that one time you couldn't get the Dow above 1,000. 1,000 was like the the ceiling for the Dow, believe it or not. And then, then the commodities were the only place to be. And I lived through that. I saw that. And then Doug Casey, in particular, some of us, and I was one, but not known in those days. I wasn't doing a report. And Doug was the first, so I kind of followed in his coattails. As now's the time to get out of commodities and into the Dow. And he was right, and it lasted a long time. Although, I called the bull market pretty successfully from the bottom to the top. And when it hit the top in 2011, I called it, but I still maintain all the basic fundamental pressures that drove the gold and silver markets higher are still there. So I expected they got ahead of themselves or overvalued relative to the consciousness of investors, and we're going to get a correction. At the time, I thought I might have been bold and said 3 years, but it's really been 11. And that's the way it is. We made some money. I mean, we had Kirkland Gold that was a 10 bagger. So I picked a few good stocks, but the overall, situation was not in our favor. I think that 2024 onward is going to be, I expect to see a fair amount of people come back that once were members and new people. And I am getting more consultations, which is usually an indicator that smart people are waking up, just like the central banks, and saying, hey, I've never bought gold before. I got $1 million in my account. I want to buy 10%. How do I do it? I don't want to get burned. I need to store it. Who do I store with? That kind of thing. And I'm getting a fair amount of those again. So I think that the shift I'm talking about is real, based on empirical evidence, real facts that I can give back to you.
So our goal on this show is to make people better investors in the commodity space. I think this conversation has helped greatly with that. But before I let you go, is there one thought, an idea, a piece of information, maybe mistakes you see people making when it comes to either silver in particular, or the commodity space in general, that you could shed some light on for our audience?
Yeah, I will. There was a book, I don't think it exists anymore, called Investing Rules. It's about that thick, comes out of the United Kingdom, and they published for years. Uh, and they ask experts in anything you could think of, mutual funds, master limited partnerships, stocks, bonds, commercial paper, corporate bonds, and they asked me to write the 10 rules. And everyone writes 10 rules, and there are people that are well known in a specific arena. They chose me for silver, and I wrote the 10 rules of silver investing. And those 10 rules still hold, because it'll keep you from getting burned. It'll keep you from choosing the wrong dealer. It'll keep you from buying too much. It'll keep you disciplined. So I would say look up 10 Rules of Silver Investing by David Morgan. It's on the web in several places. In fact, I did a video of all 10 rules. It's on my channel somewhere. But if you use a search engine, you'll find it. And I really thought those through, and that's probably the best I can offer everybody. I mean, it's free. And I've had people call and say, "Man, I wish I would have read those before I bought all this silver. Now I think I bought too much, and I bought the wrong kind, and I bought it the wrong price, and I chose the wrong dealer." And if you use those free rules, take you probably 3 minutes to read them and 10 minutes to study them, you can save yourself a lot of heartache. And I'm happy to do it. It's a public service on my part from all the years I've been in these markets to give back to the community.
Great. Well, I'll put a link. I'll search that up and get a link to that article in the description below so people can check it out. Awesome conversation, David. Before I do let you go, could you let our viewers know about the Morgan Report, what it is you do there?
Sure, I do a free service. I think everyone should get on it that's interested in the metals, commodities, geopolitics, the big picture. And then we have a paid service. You can go to the subscribe button and see it on the website. I would advocate you, if you're really interested in these markets, to follow me on Twitter at SilverGuru22. I post, all those are by me. I don't have I'm not giving anyone access to it. I had given some people access to it, just me. I also would tout the silversunrise.tv URL. I make it a documentary. Silver Sunrise is about the monetary issues, the problems, the stress around money, especially as we get to the end of this Keynesian experiment, and what we could do about it. And I've got some very powerful people I'll be interviewing for that movie. Script is done, so we're probably a third of the way done. Probably got another 6 to 9 months to do to get all the people we want to interview, and then of course we have to edit that, cut film on the floor, as they say. I'm very stoked about doing this. It's again a public service, and it's kind of the accumulation of all the years I've been in these markets, and it's sort of a finale as far as waking up. Those that are awake will see most of it, but a lot of people that are not familiar with why they're so stressed out about money and why there's a solution to this problem and what they can do about it and feel better and feel calmer and really go through their lives with more control than they probably have now. So that's the goal. silversunrise.tv. You can have a look.
Great. Well, I'll put a link to that as well as the Morgan Report and your Twitter in the description below. Awesome to hear about the documentary. You mentioned it last time you were on, so great to see that you're making progress there. Looking forward to checking that out. And thank you once again, David, for coming on the show and sharing your knowledge with our audience.
Well, my pleasure, Jesse. Thank you.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get a $10 discount on your first purchase. Link is in the description below, and I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.